Paul, do investors sell Exxon and buy Saudi Aramco?
I can't comment on that, unfortunately, Alex. I'm happy to talk about the oil market, though, and we saw some pretty significant moves, I think, particularly in tanker rates recently as a result of the outages that we had in Saudi Arabia from the attacks. It was just an interesting sub-dynamic that we saw where the Saudis were forced to import product in order to cover their own needs at the same time as they lost quite a lot of light processing capacity. And it's just been very interesting and worth taking a look at some of these tanker rates globally going up a lot.
So I get if you can't talk about Saudi Aramco IPO, but what I'm getting at, though, is we see Conoco this week increasing their dividend by 38%. Saudi Aramco also talking about a nice, big, juicy payout to shareholders. Are these things enough to interest investors back into an oil sector?
I think we certainly like ConocoPhillips as a model of what can be done in terms of cash return to shareholders, and we do think that if you combine all the risks that you're looking at for an investor in terms of buying into oil, of which, let's say, for example, the most recent is the emergence of Elizabeth Warren, and in fact, I don't find on her website anything about it, but a tweet saying that she will ban all fracking as of November. It's just yet another major uncertainty, and the only way to get around the multiple uncertainties that we face with oil, which would include a weak 2020 balance, a trade war with China, you know, all the things out there that make it so hard to second guess where the oil price is going next. There's one way to get people to buy in, and that's to pay them. And, you know, the higher the cash return, the more eventually you'll attract investors. And as you know, the E&P industry has had, for many years, a predominant strategy of growth, and at times spent more than their cash flow, for many years, spent more than their cash flow to achieve that growth. That we've been fighting with our Renaissance thesis to get that behavior changed and for people to follow the ConocoPhillips model. Absolutely.
So if you do have returns, at what point, though, do investors demand growth? Or are there some companies that actually can offer both right now?
You know, that's interesting you asked me that, because you may have seen the note that we put out this morning exactly debating that. So what we're looking at is, you know, the idea that when we originally did our Renaissance thesis, which was really arguing for the U.S. E&P sector to radically change strategy to a more ConocoPhillips direction, we realized that a blanket don't grow, just shrink the company argument wasn't sophisticated enough for a sector as complex as this. And so, for example, you'd have a controversial stock would be EOG, where most people, including me, would think that they're the best company that's out there in terms of U.S. E&P. Do they grow too much, or do they return more cash and reduce growth? The management has kept with the growth, and long term, because they're so good, they may well be right. But we didn't want to blanket punish EOG just because at this stage of their development they're growing. So it's a very nuanced question. Generally speaking, across the industry, we need less growth and more cash return.